everyone? Welcome to the Stock Market Morning Prep video for Wednesday, June 18th. We did get another little push to the upside. Again, these pushes are very slow and basically I would label them a slow grind higher. Now, we have quadruple witching on Friday, which is an expiration, and there's four investment products that actually expire on Friday. And that generally is a bullish sign for the week. Now, it doesn't have to be quadruple witching. Any really at true expiration, you might get a day or two in between the week that is a little bit weak and then weaker, and then we actually end up rallying. But generally, the week out of the 5 days is positive. So, that being said, we have been grinding higher on virtually no volume. And I mean just specifically the last week or so. We all know the last 14, 15, 16 trading days, the markets have gone nowhere but up, aside from last Wednesday and Thursday's move lower. So we have to really be cognizant of what's happening around us. And geopolitical events are escalating. And as you know, with the Iraq situation, they are now they have attacked one oil well overnight, and they're getting closer to the oil fields of Iraq. The Ukraine-Russia situation is not doing anything to help positive sentiment in the markets. However, the markets are climbing a wall of worry. Therefore, what do you do as a trader this is what we're being dealt with? Well, again, we take a step back. We reduce our share size. We don't carry positions unless we're hedged, number two. And number three, quite frankly, when in doubt, stay out. I mean, if there's not anything to trade, then take a step back. With a slower grind, higher volume days, you have to be more selective in stocks, and you have to find them really. Even if you can find the stock, you have to look for the setup and the proper entries based on your trading plan. So just keep that in mind. And if you don't do anything for the day, it's not a big deal. It does happen. But if you can put a basket of stocks that you're watching, and let's say you trade 5 times in a week and you lose 2 out of the 3, you made money for the week. So, until this market gets a little bit easier, and what I mean by at least we get a little bit of a correction. Right now, the markets have, again, totally ignored what has happened in the geopolitical front with crude oil in front of you here, knocking on the door. We hit 107 just the other day. We have now indeed pulled back a little bit, but this is a big area. 107 break, and we get through 1010. I think you're going to see 115 in crude oil. Now, it needs to break 110. That'll take some time. But we have to really watch what's happening, because at any given moment, the markets could get spooked, and you could see a major liquidation. And I mean only for, select a few days, 3, 4, 5 days, but still could be down 6, 8, 9%, 10% rather, in several trading days, and that's something you don't want to get caught up with. So you just need to really be cognizant around you what's happening. I'm closely monitoring what's going on in the Middle East, as well as watching crude oil. Right now, we also have another risk event, which is the Fed meeting today, and then of course the conference. I don't think the Fed wants to ruffle any feathers. However, if the Fed thinks that we have gone too far too fast, they can also talk down their markets as well. So anything could happen here today. So keep it light. I would go into the Fed with basically a flattish type, maybe slightly 1 or 2 positions, but I wouldn't be heavily long or short into Fed, because you really just don't know what they're going to say. My suspicion is that they're not going to ruffle any feathers, and I think that they're just going to keep everything status quo. But we need to still be aware of the event that's happening today. All right, so crude oil, as you know, break above 107, then we get above 110. I think that will definitely affect gasoline prices. Matter of fact, I know it will, and that's going to hinder on any type of recovery, at least for the short term. Japanese yen, another area that I'm watching here closely. Remember, this is the spot yen, so if we go up, equities go down. Now, if you don't have the spot yen and you're looking at the dollar yen, they're correlated with what S&P does. So whatever S&P goes up, so does the dollar yen, okay? So vice versa with the spot yen. So we got this fib cluster here. Excuse me, can't talk this morning. I have a fib cluster that is literally has been capping this move pretty much all of 2014. But if we do get out and break out of this area, you're going to look for that 200, and then of course we'll start putting some fib extensions for some targets, and that would hinder on any type of that'll at least cap any type of rally if that were to happen. Now also I'm watching his bonds. Bonds have been holding in pretty well above the 200, and as you can see here, we're just holding just below that 100% from that previous low to high. We did tap that 1272 extension. I still think that's going to be the next target, and then again, the bigger target would be the 1618. Now, bonds are still in the bear market. I do think they eventually go lower, but not until we get at least a decent pullback in this market. And once this market does pull back, I would be looking to buy the market, buy into that pullback for probably maybe a little more weakness going into September, October, and then of course going into that Santa Claus rally. Okay, let's take a look at the ES. Nothing wrong with the picture other than overly extended. We did get that 2 or 3 day pullback, which kind of unwound that overbought reading in the RSI. Volume was a little bit better the last couple of days, and now we're outside this bull flag. So again, bull flag starting to break up higher, which is bullish. So let's see if that trend will continue. Now, I did a low to high from this previous high. And as you can see here, the markets are well bid up. There's no question about it. As you can see, we've only pulled back to the 38% retracement. I'm looking for a further downcline of 1895, 1900. And what I mean by that is I'm looking for a pullback into that area. Am I short because of that pullback? No. If you weren't short back up in here on this one day, really, believe it or not, the markets only broke down one day, which was Thursday. And then Wednesday. Then Thursday, Friday, and yesterday we literally just based. So we haven't really gone anywhere. So now a break below, I would be looking for a flush lower. Yes. Okay. Now that's the ES. We have the transports. Now transports are really gonna see if what's gonna happen with the crude oil. If crude oil starts to really move higher, transports will definitely take it on the chin. And as you can see, we really haven't gone anywhere where the market has grinded higher. Yeah, the transports rallied a little bit yesterday, previous day, but remember, crude oil will affect the transportation sector. Okay, and diamonds doing not much of anything as well. As you can see, we're consolidating for 3 days. Not bearish, certainly bullish because we're hanging at the upper end of the range here, and we're holding that 20-day moving average. So you can't fight the trend. There's no question about it that the trend is up. If you wanted to take an objective short position, relative weakness to what the market's doing, sure. Don't get married to it. Keep a tight stop. That's all I can ask. That would be my advice to you. The IWM, which the Russell, we identified this bull flag yesterday. No, a couple days ago, actually. Excuse me, Monday. And now we are out of this area here of the bull flag, and we followed through yesterday. Okay, so and on volume. So to me, this is looks like it's going higher. We're going to test that high. And Russell is one of the leaders, so that is a good sign that the markets are not really going to sell off. Now, obviously, this could just revert back today and sell off whatever Janet Yellen has to say in the Fed. But that's why anything goes. So just keep it really light. Last is going to be the Qs. Qs have not done anything the last 4 days. Again, consolidating. So we have been really consolidating. Aside from Wednesday's sell-off, we consolidated a little bit on Thursday. We rallied on Friday, followed through on Monday, and had a little bit of push up on Tuesday. So we're still really haven't gone anywhere since Thursday. So let's see what happens. Let's be selective in our stock picks, and I think that's what you have to do. You have to look for stock picks, individual. Trading the indexes is just kind of a losing game. The markets have gone nowhere but just literally grinding higher with no volatility. That's a tough thing to do when you're trading in front of the screens all day. Okay, keep your stops in place, guys. Let's see what happens with Fed Chair Janet Yellen and company, and let's get through this risk event, and then we go into Thursday and Friday. Watch what oil prices do, and definitely keep an eye on the Middle East because that's going to be the canary in the coal mine. It looks like, at least for the short term. Have a great day.